The latest jobless claims data coming in worse than expected. 793,000 Americans filing for unemployment. Fed Chair Jerome Powell yesterday saying we're still very far from a strong labor market. Philadelphia Fed President Patrick Harker joins us now in an exclusive interview. President Harker, thanks for joining us.
Thanks, Wilfred. Thanks for having me.
Mention the outlook on the labor market just there. Does the relatively disappointing numbers mean that inflation is even lower on the agenda in the short term than perhaps it would have been?
No, I think it's pretty much what we were expecting in Philadelphia in terms of our forecast. This is going to be a choppy ride. I mean, the virus is driving the economy right now. And until we get vaccines in people's arms, we're going to continue to see a pretty choppy economy.
There's been a discussion over the last couple of years, but particularly this year, that now is not the time to worry about inflation. To what extent is that said in order not to spook the markets, not to spook people's inflation expectations, with a belief from people like yourselves that if we do get to a point of, say, 3 or 4% inflation, that in fact it will be very worrying?
No, so I think that what I look at is not only the level of inflation, but also is it accelerating, is it decelerating? So we've clearly committed as an FOMC to exceed 2% for a period of time, but it has to be sustainably above 2% for a period of time. Obviously, if it's rocketing past 2%, we'd behave very differently. I would behave very differently than if it's just creeping past 2%. So it's really the dynamics of inflation, not just the single number.
Yeah, I mean, President Harker, I just want to dig into that a little bit more because there was this op-ed published this week by ex-Fed President Bill Dudley, who basically argued that we could, that we could actually see the Fed pull back on stimulus earlier than expected to keep inflation in check and increasing the risk of a 2013-style taper tantrum, and then proceeded to lay out the reasons why that could be the case. I just want to get your response to that.
So my dear friend Bill, I would disagree with to some extent. We do not see, I don't see right now, inflation running out of control. We will see a little bit of a spike as some months roll off in terms of the calculation and other dynamics in the economy. But again, I don't see it roaring past 2% anytime soon. So I'm not so worried about that risk right now. Now, in the medium to longer run, yeah, sure, it's something we have to take into account, but not right now.
President Harker, tell us about this new jobs tool that you guys have launched and exactly what that's aimed at and the effect it can have, not just on, obviously, hopefully, finding jobs for certain people, but on driving productivity and economic output across the country.
Absolutely. If you think back pre-pandemic, and I know that's really hard for all of us to do, but think back to the job situation we had, the economy we had. Our goal over time is to get back to that somehow, some way. That means we need to get people back to work. But things have changed, right? The economy has changed. The skill sets are different in this economy than they were even a year or 2 years ago. So what our researchers looked at, and these are Philadelphia Fed and Cleveland Fed researchers, they looked at 33 metro areas across the U.S. and asked the following question. What are those low-wage jobs that with a little bit of upskilling, some upskilling, you can move to a higher-paying job? They found about half of the low-wage jobs, there was a match with an average increase in salary of $15,000. So this is real money. So what we've now launched is a tool, the Occupational Mobility Explorer, where you can dig down into these 33 metro areas, down to specific jobs, and see what the average increase in salary would be, and are those jobs increasing or decreasing in the economy? Let me just give you 2 quick examples. So take a receptionist. Well, they have skills to be upgraded to a medical secretary with an average increase of salary of 27%, or become a credit counselor with an average increase in salary of 45%. So this tool is meant for people looking for work, for community colleges, training organizations looking to find what they need to put in place for these workers, for community organizations, for government officials. I think this tool is incredibly powerful, and the moment is right now to start using this.
From some of those examples you just gave, is this mainly a tool for white-collar workers, or is it across?
No, not at all. I mean, this is all based on work we've done for quite a while on what we call opportunity occupations, jobs that pay above median wages, where you don't need a 4-year college degree. So a lot of these jobs are not just white-collar jobs.
Shepard Smith here. Thanks for watching CNBC on YouTube.